So welcome to the third in the series of the free webinars that I'm doing. This one's going to be focusing on information for business owners. Got a lot of new stuff happening just today. So just so you guys know, if you've been to my last two seminars, I'm not going to talk about a lot of that same stuff if you have not been to the last two. The first one was talking about new tax law changes that happened because of the pandemic in 2020. We did that one 2 weeks ago, and then last week we did one specifically for sole proprietors, independent contractors, and cash earners. That was all kind of like tax basics behind all of that. So if you want to hear more about the tax basics, I'm going to invite you to go to the RC for Life's a Fair page and rewatch the replay. Those videos are available forever now that we've done the Saturday replays. This one will be available for replay this coming Saturday at 2 p.m. Eastern. And then after that, the event link will be live, so you can watch it anytime you want to. So we're going to touch on just a little bit of stuff that we've maybe discussed the last 2 weeks, but really we're going to focus kind of heavily on stuff that really pertains just to business owners today and go a little bit more in depth to those things. So if you need some more specifics, feel free to ask the question. And if we're not really going to cover that today, then I'll try and briefly answer your question, then refer you back to the previous video if we did like more of a chat on that topic, okay? So the way this is going to work is before I change topics, I'm going to let you guys know that I'm about to change topics. And if I haven't covered your question or you have a question or you need me to repeat something, let me know at that point. Down in the bottom of your screen, there's a reactions thing. And if you click on reactions, there's a raise hand. So you can raise your hand. You can also type into the chat if you have a question, and I'll be checking the chat periodically. And if I don't happen to see that your hand is up or something like that, and I'm starting to move on to another topic, just chime in and interrupt me and let me know. So those are kind of the rules of the event. I think almost everybody knows who I am at this point, so I am not even gonna like just go through who I am, but hey, I'm Brande. And I've been on the road for a long time at this point and have been doing taxes for almost 15 years, almost exclusively in our community. So your tax return is pretty much exactly like my tax return. We're almost all the same in our community. So I probably do like 200 of the same tax return over and over and over. So it's become pretty normal for me at least. And so I'm just going to jump straight in and get ready to talk about the taxes for business owners. What we're going to cover today is this. So let me share my screen with you. Okay, I believe you guys can see that at this point. So this is kind of some of the stuff we're going to cover today. And we're going to kind of go through all these things. And if there are things that aren't on this list, again, let me know if you want to talk about something. Otherwise, if we covered it extensively in a previous week, I'll let you know. What did I did a thing. There. All these windows that are open. All right, so I'm going to jump straight in this week, and we'll just start with a quick rundown of the new COVID relief bill that was signed today. Is there anybody on here that is super unaware that something major in our lives just happened this morning? So the House passed the bill today, signed the bill. The president is supposed to be signing it on Friday. There are a lot of things in this bill that are tax changes for the 2020 tax season that are going to be like a crazy big deal. It's going to be awesome. If we've already filed taxes, it's going to mean amending taxes, but that's okay because it's going to get you more money back. So we'll be doing that. We've been told if anybody has unemployment, especially on their tax return, not to file right now, because the big change that they did today for most of our community is that they determined that the first $10,200 of unemployment income is not taxable. Holy crap. To make these changes mid-tax season is pretty unusual. And a lot of people are freaking out, but that's okay. It benefits a lot of people. So that's fabulous. If you did not have taxes withheld on your 1099-G from unemployment, it's going to help you, because a lot of people who didn't do that were going to owe a lot to the government. And the only way to get past stimuluses and this new stimulus is to be a taxpayer. So a lot of people don't really have a lot of choice but to do their taxes in a timely manner in order to get those other things. So it's kind of been this, you know, the struggle of a little bit of an offset in needing to do this and do this now when people don't have the money to pay their tax burden. So this is really nice to know that's going to offset that like that. If you were a big time smarty pants and you had taxes withheld from your 1099-G, then that just means even more money coming back in a refund. We haven't done it yet, but I plugged in some numbers to a lot of people who were kind of on hold and just took $10,200 out of their 1099 to see what it looks like. And most of our community, we have the same out of work date. So it's like March 15th-ish. So we all had almost the same amount of money on our 1099-Gs for the most part. And it looks like between federal and state, we're looking at like a $1,000 refund for most of us. So that's really exciting. And we don't have any directive from the IRS yet. So it's going to be a little bit of time before we can either amend or file the returns and figure out what we're supposed to do. My software company, who I use, Drake, mentioned the word waiver today. So it looks like there might be a form that's a simple waiver that takes $10,200 out of the tax return. And so I'm thinking that's going to be a pretty quick, easy way to get that change in there. So that'll be really cool. And but we don't know anything yet. Their email today was literally like, we don't know anything. So hopefully we will know something soon. The IRS has already had a couple days to kind of work on this directive, I'm sure, knowing this was going to pass. So that's really exciting. The other thing that they're going to do is another $1,400 direct stimulus check per person. That's going to be for anybody, any individuals under $75,000 income. If you're married, $150,000. It's going to start to phase out after that, just like the first two stimuluses did. The thing that's really kind of cool for this new one, though, is this new one is $1,400 for all people in the household, be it dependents or even adult dependents. The last two stimuluses were less money for a child dependent under $1,600 and no money for an adult dependent. So if you have a college student, someone who's your dependent but over 16 years old, or an adult dependent like an elderly parent, you as the taxpayer now get a full $1,400 for caring for them as well. So that's amazing because that was completely shut out of the last two. So that's really exciting for people who have dependents on their tax returns. So that's awesome. Those payments are going to come same way as the last two. That'll be a direct payment, direct deposit, check, debit card, however you got the last ones are theoretically how we're getting this one. It's not a rebate or a credit on the 2020 tax return like the first two are at this point. So that's going to be another direct thing. And I just want to warn everybody, if you have moved, they're going to be, if they have to send you a check as opposed to a direct deposit, they're going to be sending that to the address that was on your most recently filed tax return. So if you have moved or you can't get the mail at that address again, there's a change of address form that you can fill out, but also you can go to that Get My Payment tool and update your address. So just an FYI, if you need to check into an address change, okay?
Brande.
Yeah, hi. What was that?
We lost you for a while, or I lost you. I got you now, though.
Okay, is that you, Fran?
Yeah.
Okay, could everybody else hear me, or is it just Fran's crappy internet?
Oh, okay. That's my crappy internet then. Okay.
Sorry, Fran. Okay, hopefully the rest will be okay for you. The next part is going to be the unemployment benefits. They've extended that through September 6th, and they've added an extra $300 per week for every week until September 6th from the federal government, and that's on top of the state portion. So it's basically what we've been getting since January, for those of you whose states actually have been paying you since January. But that $300 a week is going to continue through September 6th. So, oh my God, that's amazing for the whole of our community that's still in so much flux. So I'm really excited about that as well. Let me see, what else? Oh, the child tax credit is raised from $3,000 to $3,600. I don't know too much yet about the details of that. I'm going to keep reading, but they're saying something about going forward that they're going to pay that in monthly installments to parents which is crazy to think about. So as more directives come out, once this is signed, I may end up doing a Zoom just about this new bill. But once we get some more information, we'll kind of maybe do another one. But that's really cool. There's a whole ton back in this bill: food assistance programs, housing aid, health insurance subsidies, like all kinds of crazy stuff that is going to be really cool. So look for more information. And even if I don't do a Zoom, or before I do the Zoom, you guys know I'm constantly, posting articles to the RCF page and sharing them and stuff like that. So if you find a really cool article, PM it to me. People do that all the time. If it actually explains stuff, breaks stuff down in like plain language, from a good vetted source, send it to me, and we'll keep everybody updated. So that's really exciting. That's all stuff from today. Does anybody have any questions on that real quick before we jump into the rest of the seminar? Okay, I'm looking for unmuting. If you guys aren't muted right now, don't forget to mute yourself unless you're trying to talk. And then don't forget to unmute yourself when you're ready to talk. Those are the words I'm trying to use. All right, cool. Moving on ahead. So the main thing that I get asked about all the time with business owners specifically is this whole thing about filing 1099s or W-2s. So we're going to talk a lot about that today and the difference between the two. I think because of the pandemic in 2020, we have really learned that it's really important to give forms to the people who work for us. If everybody out there would have had some sort of form, a 1099 from their employers, they would have gotten on unemployment like instantly during this pandemic. I can't explain to you how many tax returns I had to rush and do in the month of April of 2020 because these people earned only cash and had zero proof of income. So in order to get them on unemployment, I had to do their tax returns super fast to get them stimulus, to get them unemployment and stuff like that. So I really want to stress how important it is that you're giving the people who work for you something, some sort of form, for the love of God. Help them document their income. Going forward in 2021, this is going to continue to be important. If you guys don't know, unemployment is starting to ask everybody for proof of income again. Some states let you do self-certification for unemployment in the beginning, and they never asked for that. But the December 27th bill that passed basically said they now have to get that. So now if people did not upload proof of income, they now have to do that. So so there's another wave of people who are coming in who never got a 1099 for 2019, who never did their taxes, weren't required to upload them and stuff like that. So this is something we all as business owners need to be aware of and understand the benefits that it helps the people who work for us when we do issue these forms. So the basic rule of thumb, if you pay somebody $600 or more in a calendar year, you are required to give them a 1099 or a W-2. If it's under that, you're not required, but there are fines for late filing. There's fines for failure to file. The fines kind of start going up the later it is, and a failure to file can be up to $550 per person who works for you, and there's no cap on that. So again, if you have 100 people that work for you, they can charge you 100 times $550, and nobody needs that. So that's it doesn't make any sense to not do it. It doesn't cost you a whole lot. You can file a 1099 yourself. They have the paper forms at Staples, Office Max, things like that. You fill it out by pen, mail it into the IRS, send a copy to your workers. You can do it online. A tax preparer like myself can also e-file it directly with the IRS. I personally only charge $10 a person for doing 1099s and filing them and everything, because more than anything, I just want people to be doing it. So it's real cheap to get it done. But that is the legality behind it. As far as what you issue, here's the difference, all right? So a W-2 is a form that you give to an employee. You have to withhold taxes and pay their taxes on their behalf. You have to do payroll. You have to pay payroll taxes. You contribute to the Social Security, Medicare, FICA for your employee. You pay half of their taxes, essentially. You pay workers' comp for them, and unemployment insurance for each worker and in every state. So doing W-2s and switching over that to that can be a little hefty, depending on how many states you work in, depending on how many employees you have, et cetera. So that's what a W-2 looks like. A 1099, which used to be a 1099 miscellaneous, we would put non-employee compensation on box 7. Box 7 on the 1099 miscellaneous is now gone, and the 1099 NEC, which means non-employee compensation, is a form unto itself just for independent contractors' income at this point. Had a handful of people so far who have sent 1099 miscellaneouses for their contractors, or they work for someone and they got a 1099 miscellaneous, and their employer erroneously put their income under other income, not knowing, I'm guessing, that the 1099 NEC is where we file that kind of income now. The other income section doesn't necessarily go to a Schedule C, so that's a problem. So we need to kind of make sure everybody understands you should be filing an NEC, not a miscellaneous 1099. As of this year, that's a new change for this year. So you're going to give a 1099 to an independent contractor. Again, if you paid them over $600 or more in a calendar year, there's no taxes withheld. This is self-employment income for the independent contractor. So this income goes onto their Schedule C, just like a business income. Their Social Security and Medicare are paid through self-employment tax on their tax returns. So you don't contribute to that. They pay the full amount. That's the SE tax, or the self-employment tax, that we all get hit with. That's our big tax. That's because we don't have an employer paying half of our taxes in Medicare and Social Security. You can, but you as a business owner, when you pay a contractor and you issue a 1099 NEC, you can also expense that contractor pay and write that off on your taxes. So that's now an expense you can deduct. There's no withholding on a 1099. There's no payroll. There's no payroll taxes. An independent contractor is required to furnish their own workers' comp. So you don't do that, and you don't pay unemployment insurance on a contractor, as we have all learned in 2020. The business owner doesn't contribute in any way to the FICA, the taxes, the Medicare, the Social Security, all that stuff. So when you want to know which one you should issue, here's a little bit of a sticky thing. Nobody likes it when we talk about this in my seminars, but this is the truth. A decade ago, hardly anybody was even issuing a 1099, let alone a W-2. There are very few businesses on the road that are doing W-2s. Because it's, it's a lot of work, and it's costly. And so people aren't necessarily doing it that way. But I want to stress that there is a fine line between these two things. And I think the reason why the independent contractor pay has been put onto the NEC as a form unto itself is because I believe they're going to start cracking down on the difference between 1099s and W-2s a lot more, like some of the states like California are doing, and things like that. So it's something to be careful of, and it's a good idea to consider whether or not you should be W-2ing your 1099 people or not going forward. The IRS basically says that someone is not an independent contractor if they perform services for you that can be controlled by you, such as what will be done and how it will be done. So this applies even if the worker has freedom of action. And what matters is if the employer has the legal right to control the details of how the service is performed. So for example of a good person to 1099 would be someone who does week work for you, does production for you. They do it on their own time, usually at their own location. They get stuff from you, take it back to their home to do it, usually using their own tools. Those kind of things are the people that are absolutely independent contractors and would be getting 1099. However, when you tell someone when they should be at work, when they take a break, when they get to leave, what they have to wear, that constitutes them being an employee. Borderline example, and I absolutely can see where people have kind of done 1099s for a long time, because when someone works for you in a booth, it's the fair that's telling them that they have costuming guidelines and what time the fair is open and what time the fair is closed. But if you're controlling their break time and you tell them the fair opens at 10, but we need to be here at 8:30 for setup and all that sort of stuff, that really makes them an employee. The people who are actually really doing it right out here are the people who are actually 1099ing their workers for production during the week and then are W-2ing them if they are salespeople in their booth. Most people, once they get people on payroll and they're W-2ing them, are going to fully W-2 them the whole way, even if they do production and week work. But that is a legal way that you could essentially split a 1099 and W-2 for the same person. But that's the legality behind it, and that's something that everybody really just kind of has to think about going forward, as far as your people and what they do for you, because really only you know which one of those things makes them qualified for a W-2 or for a 1099. There's lots of ways that you can do this, though. There are websites out there. You can get a payroll company. I don't know if you guys know, but Square offers payroll services. I have not looked into it fully, but I know a couple of people who are using them and really like it. A lot of times your tax preparer can do that for you as well. And just a reminder that the deadline to file those are actually January 31st or February 1st, depending on how the calendar falls in each year. So those have to be out and to your people and in the mail to the IRS by the end of January every year. Yes, Adrielle, your hand is up.
Question that will probably apply to you, Elise, as well. Would you say that a henna artist would be an independent contractor, since most of the artists that work with us also have their own businesses in different locations, and they come in for a show, and it's, they get paid a percentage of the artwork that they do.
Right. You guys are kind of a little different because you're service providers. I have like a cat hair or something. If I keep doing that, it's got to get off me. It's driving me crazy. You guys are like service providers. So it's almost like you're a cosmetologist where like you rent out a chair in your salon for somebody, but each of those people are their own business. So that's kind of handled a little bit different than what I'm talking about. Those people are 1099 contractors. They have their own businesses. They're renting space from you. Cool. Yeah. So what I'm really talking about when I'm talking about working in a booth is more somebody who works for you as a salesperson. If you have a host, if you pay a host who isn't doing their own henna, that's the position that I'm talking about that you probably need to think about. But as far as the rest of us go, sales in a booth, that's the kind of thing to think about. We're going to start checking into Uncommon Adornment started W-2ing everybody, my company, ages ago. So we've been W-2 for a long time, which was really helpful, by the way, during the pandemic, because we all got on unemployment like the week we filed. There was no proof of anything that needed to happen because they had a company they could go verify with. And so we were really taken care of during this pandemic. So that's another kind of nice thing to think about for W-2ing people. God, what was I getting ready to say? Oh, when you make the jump, and I know there are a lot of people out there that don't give any forms still to people, and it's all still cash under the table. I think that probably maybe half the clients that I do their taxes come in still with cash income and no forms to back it up. Couple things that everybody needs to know is, number one, if you're paying somebody cash and they report that cash income, which legally they have to report their cash income on their tax return. There is no place. A lot of times I get people who are super concerned they're going to get their employers in trouble because they know their employers are supposed to be issuing these forms, but they're not, and they don't want them to get fined and stuff like that. I have to remind everybody, there's no place on a tax return to tell anybody who paid you cash income when you're an independent contractor. So you can't really get an employer in trouble, but should that person get audited and they ask who they made this money from, now you may have a little bit of a problem on your hands. So you could end up getting caught with a fine because of that. Now, granted, a lot of us aren't getting audited out here on the road, but that is a possibility and something to keep in mind. when you're making that leap though to issuing forms, you really need to sit down with your people before the show opens. When you're having the conversation about a new hire to a show or somebody coming back as these shows are starting to, they're maybe going to start opening again. You need, even if your people are coming back, you need to have this conversation with them to let them know you're going to start issuing 1099s, or you're going to make the switch to W-2s, which again is going to be a shock to them. So now they're going to have taxes withheld. So they're going to be making less each week. That's something you may need to consider. Do you need to raise their pay in order to make sure that what they're taking home is equivalent to last year's? The other thing you have to keep in mind is that there are minimum wages that are different for every state. Every single state's minimum wage changes almost every year. So you've got to pay attention to that as well. If you're paying a W-2, you cannot pay below the minimum wage. Now, legally, if it's an independent contractor, you can pay whatever you want. They can accept whatever you want. Is it morally a good idea to pay an independent contractor below minimum wage? I'd say no. That would be an individual choice, obviously, but I still check every single year what the minimum wage is for every single state, and make sure I'm paying well above it. Personal decision on my side, but that's what needs to happen. You need to kind of keep in mind that every state is different, and a lot of states are on this like elevated increase of minimum wage where they passed something a few years ago and it goes from $12 this year to $13 next year, that sort of thing. Like Arizona is one of those states that's making its way up to 15 right now. So it changes every year. So have this conversation with your people. Yes, Elise, I'm sorry. I see your hand up, sweetie. Go. Don't forget to unmute. There it is.
Did Uncommon Adornments use any commission-based sales, and was there a way for that to be worked into a W-2?
We as managers are all on commissions. So basically tax are just assessed at the end. So every weekend we do a financial report and it shows the percentage of the sales that come to us, and then we're taxed based on that. It's pretty easy. You can set somebody on an hourly. You could set somebody on a daily if you really wanted to. Somebody who's on commission, it's all the same at the bottom line. How much do they get paid? And then they get taxed on that number. So the bottom line is have a conversation with your people, especially your people who are returning. You don't want to shock them, for God's sake, but let them know you're going to start issuing 1099s. You're going to start issuing W-2s. You have to collect their name, address, social. You can have them fill out a W-9 for an independent contractor that will turn into a 1099 at the end of the year. That's a free form. You can download a W-9, or you can have them fill out a W-4, which is an employee that will do the withholding and all that sort of stuff that will turn into a W-2 at the end of the year. You're going to have them fill that out before day one of work, because I'll tell you exactly what happens. People decide at the end of the year, oh shit, I better do some 1099s. And then people don't want to give them their social security numbers because you didn't tell me you were going to do that. So no. There are people out there who are like on disability. There are people who are on unemployment and are trying to, work under the table and not report that income. There are a lot of people out there who don't want to report this income, and they're earning cash under the table for a reason. You have to have this conversation with them ahead of time, morally, to make them understand why you're doing this. And if they refuse ahead of time, then you have a choice on your hands. Are they good enough to hire back and take the risk of a $550 fine for every year they work for you? And if not, well, then you have to decide if you want to hire them back or not. And that's the fact of the matter. Now, I will also say that a lot of times people are just scared of what it means to get documentation. They just are ignorant to the process. And so I just want to say to those people, as I say on every one of these Zooms, if they're just scared about what it means, give them my contact info and I'll explain to them what happens when you get a 1099 if they've never gotten a form before and all this sort of stuff. So once they get past the fear of it, it's okay. They'll accept the 1099. They still want to work for you. It's all, it's all good. But just make sure you're having this conversation with them, before they start working for you. Otherwise, that's a little shady. Just let them know. The other thing that I want to mention to people, to also let your people know, a lot of times people who work out on the road for us think they're under the radar, making things under the table. Nobody knows they exist. The government doesn't know they exist. Well, first of all, if they were on unemployment this year, the government now knows they exist. And I will say that people who think that they're off the radar are really not. And I've used this example before, but I will tell you there is a festival that I know of for a fact, because it came back to me as a tax preparer, who had the state come in and subpoena their pass list. Because technically, if you have a pass, that means you were earning income at that fair, right? So then they had a name and an address and all that sort of stuff for every single person that supposedly earned income at that fair this year. And sure enough, they start going back around. And if they don't have a tax return on file, you start getting some contact from the state, then from the IRS, and et cetera, et cetera. So there's a lot of people out there who think they're you know, under the radar. They're really not. So just let your people know that it's time to get right. There's a lot of benefits we've seen in 2020 about having this paperwork and being on file with the government. There are good things behind that. So we just have to remind people about that so they're not so scared, you know. Is there anybody who has any questions about W-2s, 1099s, that sort of stuff before we move on? Okay. Cool. Is everybody panicked? No? You good? Okay. Usually there's like this white face in the crowd, like when I do this seminar, this portion, like in front of people, and everybody's just like, shit, what? So, all right. Okay, good. We're gonna move on to, one more thing I wanted to mention to you guys. This is super important too, if you're making decisions to go from 1099s to W-2s or from cash to 1099s. Somebody who owns their own business reports their income, usually if you're a sole proprietor, on a Schedule C. If you earn cash or you get a 1099, you have the same tax return as a Schedule C. You get to deduct all the same stuff as a business owner on a Schedule C, but a W-2 employee like myself for Uncommon Adornments, hey Katie, and a W-2 employee as of 2018 can no longer write off any job-related expenses. Okay, so my company, being amazing as they are, in 2019 started paying all of us our mileage, our camping, reimbursing us for all those expenses, because the company can still write all that off, but we as employees can no longer write it off. So if you're going to transition into W-2s, keep that in mind and ask yourself what other benefits you can help your person out with, to make sure that at the end of the day, they're not making way less by working for you because you made a business decision to start handling things correctly. You know what I mean? So consider that going forward as well. All right, what we can write off. This is one of the few things that we have talked about in different seminars that I am still going to address real quick, and I'm just going to rifle through a list of stuff. And if you guys need further explanation, I'm going to refer you back to last week where we talked extensively about all the things you can write off. But I just want to say through this, if you are a pass-through entity, a business owner, independent contractor, you can write off all the same stuff. Our biggest write-off generally is our vehicle when we travel for work, travel for a living. You can write off mileage if you do actual expenses. You can write off fuel, oil, maintenance, repairs, tires, insurance, license, registration, loan interest if you have a loan for your vehicle. We had a big discussion last week on actual expenses versus mileage, and hint, I'm a big fan of actual expenses. So save all your actual expenses for your vehicle. It only takes one big tire year, or God forbid a transmission year, before mileage is no longer the best thing for you to take. So keep that in mind. You can write off the business percentage of your cell phone. You use your cell phone in your booth probably for Square, for ordering supplies during the week, social media for advertising purposes, running your website, your Etsy. So your business percentage of your phone, hotspotting, internet, all that sort of stuff. Fees for your website, fees for hosting, PayPal fees, Etsy fees, as they keep increasing every year, that's all deductible. Postage, if you have your mail forwarded to you all over the country, if you ship off orders from your website, especially now with so many of us transitioning to more online sales, that's absolutely, a higher expense this year is postage. Storage units, as we travel, a lot of times we have to have our stuff in storage units. All the insurances of a business owner, the business insurance, liability insurance, vehicle, auto insurance, your out-of-pocket health insurance premiums, licenses, permits, if you are a service provider who has to have a certain kind of license to do what you do. Tolls, as I've said before, when I leave Bristol and tow my 1-ton diesel dually and 40-foot fifth wheel to the Boston show, it's $150 in tolls one way. So get an iPass, gives you a discount. Your assets are generally going to be a large purchase over $1,000. This is the kind of thing where we're going to spread out a large purchase over many years so we can take it as a deduction across many, many years. If you buy a booth, that might get spread out over 15 years. If you have a $4,000 Underhill tent, that might get spread out across a couple of years. If you buy a cart, if you have a trailer, a printer, a computer, tools, if you're a musician and you bought a new guitar, all of those things are things that you can use as assets. It's very important if you do your own taxes or if you have someone who does your taxes for you to talk about and think about not just this year's tax picture, but next year's and the year after. Because if you get into more shows and you know your income theoretically is going to go up in 2022 because you're accepted to 2 major fairs, it's smart to understand that as your income goes up next year, that you'll owe more taxes, so you'll need more expenses. So that's when you want to make sure you can take more of your asset deduction in future years as opposed to taking them all right now. So that's why it's important to have that conversation with your tax preparer, or if you do your own taxes, have that conversation with someone you know, like me, who does taxes and can give you some advice on how to spread that out, okay? Per diems, you can use per diems for meals. When you travel more than 50 miles away from home, you're allowed to take per diem for the days you're working away from home. Now, per diem is only 50% deductible, but it covers a minimum of $55 per day per person. Now, if you have child dependents, you're not taking that for your child. Let me stress that. But if I have a business and then you know, my husband has a business on a different Schedule C, you can both take meals is what I'm getting at. That's only 50% deductible, but don't forget, you can't use the meals per diem on like the days that you go travel to the Grand Canyon for fun. So these are going to be for work days, essentially. Now, a lot of us are working during the week, not just on the weekend. So it's a matter of considering, you know, when you're working and taking those days. What's new for 2021 and 2022, which is really cool, is business meals are back to being 100% deductible. Now, these are going to be actual expenses. So for this, you're going to need to save receipts. And because the restaurant business took such a hit during the pandemic, they've brought this back just for 2 years to encourage people not just to go to restaurants and eat, but for those of us who don't want to do that yet, you can also use that for takeout, for delivery. If you're like me and you're working from home and have been living on DoorDash because you're too busy to stop and make food, then you can also take it for that. That includes the tip, by the way. It also includes drink. Now, don't forget this needs to be business meals. So this means you're going to be with your business partner, with your spouse who's in the business, with an employee, with somebody who you're discussing business. All right. So we're not talking about like every meal, you know, where you're sitting and watching TV and you didn't say a word to anybody. So like be smart about this. But back in the day, we used to be able to take 100% meals and that's been gone. Entertainment is still gone. So just keep that in mind. You still can't write off any entertainment stuff. But prepared food is where this 100% deduction comes from. Now, this is not counting toward the 2020 tax year that we're working on right now that we're talking about, but this is starting right now. So start saving those receipts for next year when we do the 2021 tax return, and it also works for 2022. Okay, does anybody have any questions on all that I just rifled through? And I will remind you that last week's Zoom is up on YouTube for replay to watch an extensive discussion about all these expenses we just talked about. I'm looking. So Carrie, the seminar that I just did with a tax lawyer was saying that if your partner is in the business with you and you are working from home, for instance, my boyfriend is my business partner, that absolutely qualifies, so long as it is a business meal and you have discussed or done business work during said meal. Carrie had a question in the chat. So since that came from a tax lawyer, I'm going with that for now. They change these things all the time, so it's a really good idea to keep investigating. But she's saying it's a pretty gray area. It's absolutely true. But you know, a lot of times for us in our business, we've talked about this before. A lot of times our life partners are our business partners, and so it's kind of a little bit different. Especially if you're, you know, married filing together, if you don't have to have an established partnership, you're filing together on Schedule C, splitting your income, stuff like that. That's kind of regular, you know, in our lives. So that's definitely something to consider. And even if you're in separate businesses, you know, I would absolutely consider my boyfriend my consultant for, you know, for my business and for his business. We're not on each other's businesses legally, you know, IRS wise, but we certainly do talk about all kinds of different business stuff and make decisions, you know, together. So, Carrie's just saying, to quote my mom, the CPA, quote, "There isn't a year that Congress doesn't fuck with the tax code." I didn't say that. Carrie said that. So yeah, this is just a major one, especially for our community. Okay, so then I want to talk a little bit about your system for organizing and for expensing and tracking your income and all that sort of stuff. My real rule of thumb is, I don't care what your system is, just have a system. Find a system, stick with a system. I love spreadsheets. I'm so anal retentive when it comes to that. I would love to organize all of it. When it comes to my personal taxes, I shove everything in a manila envelope and deal with it at the end of the year and create spreadsheets at the end of the year. I'm so bad about my own stuff, but I will say this, I do have a system. I have an envelope in my house and I have an envelope in the truck, and it has the tax year on the front. The one in the truck has the odometer reading from January 1st of every year and the ending odometer reading from January 1st of the next year. And I take all those receipts. I sit down with my own tax organizer, which I literally was doing right before this call, doing my own taxes, and organize my own receipts. So many of my receipts are digital these days. I have a habit when I buy something for the business, I download that digital receipt right then. I put it into my business receipts for 2020 tax folder. I change the name of the file right then and there to say Amazon, what I purchased, the date of the purchase, and then I put the grand total of the purchase right there in the file name. So when it comes tax time, I don't even have to open the file. I just go through the file names and just add from there, because based on the name of what it was, I should be able to know if that goes under supplies or goes under office expenses or like what category it goes on. So that's just a way that I've found to kind of like cut my time. So I kind of organize, but I kind of don't organize. You know, some people still do it on paper. They have a notebook and they record like their sales in a notebook every single weekend. That's fine. That's your system. I would recommend, however, from personal experience with a tax client, if you are a paper only human, make it a habit as a part of your end of the weekend ritual to take a photo with your phone of every single page that you changed during the weekend. Because if something happens to that one and only notebook, you now have a backup. Then if you're the kind of person that uploads to the cloud, put that stuff on the cloud. I put everything on an external hard drive. My system used to be every time I would get to a new show after opening weekend, I would sit down and I would back up my whole computer to my external. Now, granted, I haven't been to every show this year, so I've been trying to do it every couple of months and kind of keep in that system. But that's my system. So find a system. Some people love QuickBooks. They do everything in QuickBooks. You know, more power to you if you understand that. Some people just can't, you know, don't understand that sort of thing. Some people don't spreadsheet, you know, so just figure out what is your system and make sure you're tracking your income, all of your expenses, what state you earned your income in. And don't forget, you don't track expenses by state, but you track income by state. We're going to talk about that a little bit later. Who you paid and what. All of that stuff is the kind of thing that you need to be making sure you're writing down and you're tracking every single day, so that you don't have to get to the point where you're trying to recreate it in your brain a year later, because that's where accidents can happen and fuzziness starts happening. We're going to talk a little bit later too about this. We talked a little bit more extensively last week, but there's an app for everything these days. Get yourself an app. There's so many business apps out there. QuickBooks Self-Employed, if you're a QuickBooks person, integrates with your QuickBooks on your computer. And so if you like QuickBooks, then you can do that. That is a mile tracker and a receipt organizer. It's something like $12 a month. So there is a fee to that, but it's organized like hell. And then there's a couple of other free ones like Stride, STRIDE, and Everlance that a lot of people in our community use and love. Those are free. There's another one that's called Receipt Bank that has a lot of really good reviews on Google. At least it's like $14 a month. But what these are going to do is they're going to mile track. We talked about Everlance last week being the Tinder of mile tracker apps. Every time you take a drive and you turn your engine off and on and you stop and whatever you stop driving, at the end of the day, it shows you like a Google Map clip of every segment that you drove all day. And it literally has you like swipe left for personal and swipe right for business. And at the end of the year, they're gonna create a spreadsheet that shows you all your business miles, what your total miles were, and what your personal miles are. That's super important information for your business, for your taxes at the end of the year. So that's super cool. The other thing that these things are doing are digital receipt tracking. So if you buy something digitally, you can integrate your email into it. You can send the email over to the app and it will categorize for you where that expense goes. It'll ask you, where do you want to put this? You can create there's a predetermined bunch of business categories, or you can create your own. So if there's one that doesn't make sense for you or doesn't exist because it's specific to us, like booth fees, or something like that, you can create your own category. If you have a paper receipt, you can take a photo of the paper receipt, write that in there, and then you can itemize that photo receipt, and then, the digital receipt, and then you don't have to keep the piece of paper. As we talk about, you've got to keep years and years and years of receipts in case of audit. If you do get audited, you're just going to print out photocopies of all these receipts. So they're not going to know if you kept your paper receipts and went to Staples and made photos, or if you printed off a ton from your handy dandy app, or in my case, you've got it saved on your computer and you print it from there. They just want to see copies of your receipts. So, if you travel for a living, if you live in an RV, like me, space is, a commodity. And, I don't want to carry around 10 years of tax receipts if I don't have to. So since I've started doing the digital keeping, my receipts have gone down and down and down from, I used to have like those big file organizers, with like all the things. And then it turned into just like a Kroger bag, like of things. And this year I was just pulling all my receipts. And this year I was just in like an envelope, like a regular mailer. And I was just like, oh my God, that's so exciting, but that's really cool. So somebody is saying in here, Adrielle is saying, Hurdler is newish, HURDLR is newish and specifically meant for self-employed folks and their customer service rocks. I like that. Is it a free app? Yeah, free? She's saying free. Okay, so HURDLR. And is that a mile tracker and a receipt keeper?
It's free, but with subscription things similar to like Everlance. And yeah, it does a mileage tracker. You can customize. I've been I downloaded all of them after last week and been playing with them.
Right. And that was your
trying to find
favorite?
what I like. And so far that one I like the best. And I've been they have an in-app chat with customer service, and you get an actual person responding to your questions pretty quickly. So
that's awesome. I love that.
Yeah.
Cool.
So far I like them, after a few days.
Very cool. I added it to my talking tips for the next seminars. Thank
Awesome.
you. Sweet. All right, cool. Does anybody have any questions about any of that? Okay, cool. Okay, I'm gonna move on. Don't forget receipts are king. We've talked about that a little bit in previous things, but just remember an itemized receipt shows what you bought. A bank statement shows that you bought. So as a IRS auditor explained to me before, a bank statement might show you spent $75 at the 7-Eleven, but they don't know if you spent that on fuel or on Slurpees. That is an actual quote from an IRS auditor. The itemized receipt from that 7-Eleven shows you spent it on fuel, and it makes that an expensable receipt. But if you get audited, they're not going to let you take any expenses where you don't have an itemized receipt and you just give them bank statements. So just be real careful about that. Now, if you bought something, let's just say you bought something from, Delta, they may let that fly. I don't know. It's better not to risk it, especially when it comes to, a Walmart receipt or God forbid an Amazon receipt. Could have spent that on anything, so just make sure you have the receipt. That's really important. All right, businesses in the pandemic. So our expenses didn't stop just because the income may have or was greatly reduced. Most of the businesses this year in our community, at least, are probably going to be in a negative. That's just a fact. There are some people who managed to move online and do some things that made their business miraculously not in a negative. So more power to all of those folk. But most people are in a negative. That's okay. That's just a fact. That's going to be a fact of the pandemic for a lot of businesses out there. So don't freak out about that if your business is in a negative. If you got unemployment, if you had other kinds of income during the year, it's going to help offset any taxes that you owe anyway. So it's not a terrible thing. There are net loss carry forwards, and now there are net loss carry backs that are back in effect. If you owed a lot of money in a previous tax year, I believe it goes back 3 years, and you have a business loss this year because of the pandemic, you can actually amend the previous tax return and take your loss backwards 3 years to lessen your tax debt, and therefore turn into a tax refund. So if there are any taxes that you owed the last 3 years, go back and look at what you owed and see if you need to talk to somebody about amending your tax return. That's another new something that they put in because of the pandemic. That's pretty freaking cool. But if you don't have that sort of tax burden in previous years or don't want to bother with amending, it will carry forward to next year. So it essentially is going to become an expense on next year. Adrielle, do you have your hand raised for this topic? Go for it. What's your question?
It was actually about itemized receipts. I've been finding lately that especially restaurants, like smaller places, will often just have the credit card receipt, and that's all they have. They don't have any other printed copy to give you. If it has the name of a restaurant on it, is that enough that it was a restaurant that serves food, or do you need to ask them to write it out?
No, for that particular thing, because 100% of meals expense is back, I think you're fine for that. I mean, unless that restaurant is like, I don't know, like even if you ate in the Walmart at the Subway, it would still be a Subway receipt. I can't even think of like a scenario where you may have done something else at a restaurant besides eating there.
One of those places that has a gift shop, I guess, where they sell t-shirts.
Maybe. Dave and Buster's, there's one. Like, you might want to be careful about Dave and Buster's, that sort of thing. But I'd say 9 times out of 10, you're pretty safe on that one. Yeah. All right, cool. So then back over here. Assets. The assets are not going to stop depreciating. If you put something into being a business asset last year, year before, whatever, it's going to keep depreciating. So sometimes because of the pandemic, our 2020 businesses are in a negative because of our assets. They're in a negative before we even put any other expenses in there. That's just kind of a fact. Like, you can't really stop that. It's just kind of there. And that's okay. It's going to help on your tax burden, like we said. So it's not a huge huge deal at all. I'm going to talk about state income tax and sales tax and stuff in a second. Does anybody have any questions about what we've covered so far before I move into that? All right, moving on into state income tax. So we're talking about income tax, not sales tax. All right, so it's really important for everybody to understand that we are legally required to file income taxes in every single state in which we earn that income. Even if your home state is Florida or Texas or Tennessee or any other state that doesn't do state income taxes, if you earn income in other states, you have to file in those states. Now, you don't pay taxes on all of your sales or all of your income in that state. You pay taxes only on the income that was earned in that state. But that's something that's really important to understand. It's all about allocating the income. Again, you don't need to split your expenses per state, but you're going to split your income per state. And that's super important for you to keep in mind and make sure that you're keeping that separate so that at the end of the year, when you do your state taxes, you can account for that. And let me just see. Yeah. Oh, right. Yes, it is a hassle. That's for sure. I do 6 states a year. So personally, so I'm well aware of what a hassle that is. Every state plays by their own rules, and their tax forms are completely different. I know people are still doing all their states on paper by hand, which just, I can't even imagine. I used to do that, but no way, not a chance anymore. But just know that is something that you do need to pay attention to, is filing in all those different states. One of the reasons that's most important for you guys, if you pay sales tax to each state like you're supposed to, obviously if you're a service provider or something, you don't pay sales tax to those states. But if you sell things and you pay sales tax, you have to understand that at some point it's going to start looking a little fishy when there's sales tax being paid in a state from a business and no one is ever paying income tax on those sales. So eventually that very well may catch up to you. I've seen it happen before. The states, I will warn you guys, are more vicious than the IRS could ever dream of being. A lot of the states are running out of money. Some states are bankrupt. They want their money, and they'll if you don't do it, they will come and assess a lovely guesstimate for you. I'm going to give you 2 examples. I see your hand raised, Janie. Give me 1 sec. I'm going to give you 2 examples. I have an entertainer friend who is on the road, and they weren't paying sales tax. Now, this is sales tax. They weren't paying sales tax. They had someone from the state come and sit in their audience and watch every one of their shows and guesstimate their tips and guesstimate their merch. And at the end of the weekend, they handed them a bill. Then they also informed the income tax people about that situation. So then they got double dinged from sales tax and income tax. And then they guessed at what they owed them from previous years and sent them a huge bill. So they had to go back, and I think I did like 8 tax years for them or something like that, in order to prove to them that they didn't owe them that much money. But it was a big mess. The other side of that is, especially like in this year in 2020, did you guys file $0 sales tax returns in the states whose fairs didn't open? Because here's the thing. If you don't file a 0, they're going to guess that you opened, and they're going to guess that you earned the same amount of money as last year. We just got a letter in the mail from the state of Ohio because the boyfriend thought that he filed a 0 with Ohio like he did with all of the rest of the states, and apparently he didn't. So he had to go do an appeal and file a 0 and go back and do that. So they'll guess at what they think you're going to owe if you don't file a 0. All right. And then they'll guess wrong, he said, because that show didn't open. And so that's super important to understand that it's important to keep that updated. And likewise, I will tell you that I was an Ohio resident for years before I changed my address to Arizona. But in Ohio, I stopped doing that fair. So I was earning no income in Ohio. So I stopped filing Ohio. Well, guess what? Ohio income tax sent me a guesstimate of what I owed them for taxes. So then I had to turn around and file a $0 income tax return in the state of Ohio because I had previously filed in Ohio to show them that I don't owe any taxes there anymore. So it's something we have to stay on top of. So if you have not done a $0 tax filing for all the states of fairs that didn't open for you in 2020 or in 2021, put that on your list to do. That is something you definitely want to do. All right, Janie, I'm over to you now. Go ahead and unmute and ask your question.
Hi there. My question is actually two questions. One will be what if we're making money in a state where there is no income tax, like Texas?
Good.
Should we-
That's paid to your home state.
That's what I was going to ask. Shoot.
Yes.
I don't do that. Thanks. Okay. Also, internet sales. If we have like a website and we're selling, is that home state or is that the state where we sell it?
Yep, that's literally what I'm going to go to right now. Thank you for asking that question.
Oh, sorry.
No, you're totally fine. You're totally fine. You're segueing me nicely. So when you earn income on your website, on your Etsy, on your Patreon, on anything like that, that is paid to your home state. Even if you're technically in another state, let's just say I spent some of the pandemic in North Carolina, but those sales weren't really they're in North Carolina to North Carolina people. That's still paid to my home state of Arizona. Now, there is a law for sales tax. Okay, so specific to sales tax. They call it the Amazon laws sometimes. This is Quill versus North Dakota was the case, I believe it was, where if you have, it's basically Nexus, sales Nexus. You can Google that. If you have, Carrie's saying Wayfair. Yeah, you know what? I pulled up what I saw. What I saw was Quill. Is it Quill? Wayfair is the same thing. Anyway, there's a law that changed everything basically for sales tax that says if you have a nexus in that state, which means a physical location where you normally sell in that state, if you ship orders to that state, you have to pay the sales tax to that state where it's going. I'm gonna give you an example. I have a tent location in Southern California at that fair. It's not even a permanent booth, but I have a tent there. When we ship an order to California, we have to pay California sales tax on that order because we have a nexus there. We don't do the Georgia fair. So if I ship an order to Georgia, I'm actually not paying Georgia on that. That still goes to my home state. Does that make sense? It's a weird thing. It just started a few years ago. Not a lot of people are really doing that correctly, but I will say this. If you're paying all your sales tax to somebody, if you're paying it to your home state, and then as things progress, maybe one of those states realizes, catches you, whatever, at least you can amend that tax return and get some of that money back from that state in order to pay the proper state. The real problem is when you're paying no one. If you get busted, now you're in a lot more trouble. Now we're talking about fines and fees and penalties and things like that. So the sales tax thing is kind of a little more complicated. Our website for uncommon adornments, I built it. It's through Volusion, and they actually allowed us on the back end to go in and say which states needed to get charged sales tax, and which states, at the end of the year we can allocate it. To each state, or at the end of the month, at the end of the quarter. Every state's different how you have to file. That's the other thing to keep in mind with sales tax, is every state is totally different. Sometimes you may be set up just as like a temporary vendor, and so you are only paying for the 2 months you're in the state. But there are some states, depending on how you set up yourself, like in North Carolina, if you didn't set yourself up as a temporary entity and you just set yourself up as a regular business in North Carolina, you have to file a 0 tax return for 10 months out of the year. It's so stupid. But they're all different. Some of them you pay annually, some of them are quarterly. So make sure you check the rules and, again, have a system. Make sure you've got somewhere where you keep all this information, all your login, when your returns are due, and don't forget about your $0 filings as well. Does anybody have any questions on state income or sales tax? Janie, I see your hand still up. If that's not a new question, just deselect that hand raise. Cool. Sounds like somebody unmuted. Anybody have a question? Okay. All right. Going into, all right. New tax law changes due to the pandemic. So we now, as of today, woohoo, have 3 bills that have gone through in 2020 and 2021. So the CARES Act in March 29th, Consolidated Appropriations Act of December 27th, and then the third bill today, which I'm sure has some fabulous name, but I don't know it as of right now. They're all going to be affecting the 2020 tax return and inevitably 2021 as well. The first thing I want to talk to you guys about is collecting unemployment while earning some self-employment income, be it on your website, temporary gigs, Patreon, maybe you receive the EIDL, maybe you receive PPP. So we'll talk a little bit about how that all interacts with each other. The first thing that is crucial for me to explain to you guys and make sure everyone understands, and please, please, please tell all your friends in the community, if you earn income in any way, shape, or form, be it on your website, maybe you had a fair that you did go work, anything like that, please make sure that you continue to claim your weekly claims on your unemployment. This is crucial. If you do not do that, some states will close your account and you get to start all the fun of reapplying over again. Please, please, please let your friends know that unemployment did not end. It's continued again. It's extended again. Some people stopped getting money back in December and they think it's just over. It is not over. You've got to keep filing. You've got to keep doing the thing. Even if you have a fair that opens, even if it's a 9-week fair, maybe you did TRF for 9 weekends, that still needs to be considered a temporary job until the moment that we're all back to work without fear of cancellation of festivals, which clearly is not yet because we just had another one canceled just the other day. We need to continue to claim our income to keep our unemployment open. That is really important. Don't forget, as a self-employed person, when you claim on your weekly claims, you're claiming your net income. You're not claiming your gross income. A lot of these websites on the weekly claims ask specifically for your gross because they are not set up for self-employed people. A lot of them will have like a little question mark next to the gross thing. And if you click it, a lot of them have a little thing that says, if you're self-employed, use your net. On your Schedule C, your net income is line 31. If you look at last year's Schedule C, if you take your net income and divide it into your gross income, that's going to tell you what percentage your net is to your gross. If your percentage is 25%, then that means when you claim your weekly claims, you need to be claiming 25% of what your business earned if you had website sales or open to fair, because your business earned the gross, but your person only earned the net. So the net income is what qualified us for unemployment, and therefore the net income is what we claim on our weekly claims. That's why a lot of people who are self-employed or independent contractors are not making as much, the full amount from the state, because we had to use our net, right? Super fun. But if I had to use my net to get my weekly, well, then I'm using my net to get my weekly as well. And what that means is your weekly for that week may be reduced or totally eliminated for the week. But when you get to a week where you've earned nothing, as long as you've continued to claim, you go back to earning full benefits. Now, for me, like with my tax business, some weeks I make more money than other weeks, so I claim my percentage of net. And as long as you earn $1 from your state, so unemployment in Arizona is $240 a week. If I claim $239 from Arizona, I get $1 from the state of Arizona, but I still get the full federal $300. If I claim $240 in income that week, I lose everything, including the federal $300. So you've got to earn $1 from state in order to keep your federal. When you're claiming your net, depending on what kind of business you've been doing, you may actually still get your federal and just have your state reduced. But if you had a real big week and you lose everything for that week, well then congratulations, because you earn more than your unemployment anyway. But just make sure you keep that active and open. Your website sales, your Patreon, all that sort of stuff, like that's not free. You still have expenses against all that. So it's important to keep that in mind, and just make sure that you're continuing to do those claims week after week, because unemployment's been extended to September 6th as of today. So that's super important. Please, please, please spread the word as these shows start to open. I can't tell you how many people tell me they stopped claiming when they went and worked Louisiana or TRF, and I'm just like, no, please go back in and do those weeks of claims. All right, so if you have collected unemployment and you got the PPP, I'm going to go through this real quick. The PPP is one of those that I'm going to say, holy crap, they keep changing it. So as of even today, a few of us before this call have been discussing the newest changes to the PPP. So what I say today might completely be changed next week. So just know that as of this day, this is what we know. When you guys get PPP, if you got the first round, the money, if you paid yourself with it, the money was supposed to be paid over 8 weeks. That means that over 8 weeks, you're supposed to be claiming that you paid yourself on your unemployment claims. 8 weeks. So if you are one of the people who got $1,000, a lot of the independent contractors just got $1,000 on that first PPP. You were supposedly, you're supposed to take the $1,000 divided by 8, and you were supposed to claim that on your weekly claim to unemployment, which would have reduced your unemployment by that amount of money that week. Okay. If you got the second round, they changed the rules. And in the second round, you could take that money over 24 weeks. So over 24 weeks, you're supposed to be taking that $1,000 and dividing it by 24 and claiming that as your personal income. And again, if you got more than that, then great. If you use that money for PPP to pay your employees, if you have actual W-2 employees, that doesn't count against your unemployment in any way, shape, or form. So you don't need to worry about it. So I'm just talking about if you paid yourself, okay? Now, when everybody gets off the phone right now, if you guys have not applied for the PPP round 1 or round 2, I'm not going to lie to you. I didn't think it was worth applying, and I didn't apply myself because I don't have W-2 employees in my tax business. It's just me. So I didn't apply because it doesn't really work for sole proprietors. They changed that as of March 3rd. All of a sudden, they're letting sole proprietors apply as they're as an employee of themselves, and they're letting us apply with our gross as opposed to our net, which is massive change. So me and can I tell your names? Those who I was talking to before this call. Me and Elise and Adrielle were all talking before this call about this new change, and we had posted this. RCF had posted an article about this too, but it wasn't until this morning when a friend of mine who owns a business in our community who's full-time on the road had been talking to me about PPP, and she applied 3 days ago, and she messaged me this morning and she was like, I cannot believe, I'm so happy I let you talk me into applying for the PPP because I just got approved for $20,000, and that's a grant of $20,000 because she was able, as of March 3rd, she applied, hey Brent, she applied to the PPP as of March 3rd, and they just changed the law to let us use the gross. Line 7 on your Schedule C is your gross. Line 31 is your net. So she was able to go in and get $20,000 of a grant. She got the approval today. That is freaking massive. Oh my God, holy crap. So we were all like scrambling to go put our applications in right before this call. I'm frantically trying to do my 2020 taxes because I do all your taxes. Mine are always last. And so I'm like trying to scramble and do mine so that I can use my 2020 taxes because I made more money in 2020 because everybody needs to do their taxes in 2020. So I want to use that tax year in order to get more money to pay myself. So by their rules, you take your, used to be your net when you first applied, but now it's your gross. And you take that and consider it your income as a sole proprietor. You divide it by 12, which is by 12 months, and then you get 2.5 months of that. So take that gross, look at your line 7 on your Schedule C, divide it by 12, then multiply by 2.5, and that's what you could possibly get from the PPP. These new rule changes apparently end today. I don't know if they're going to extend it with this new bill. That application can be done through Square, through PayPal right online, through Lendio, through, what's the name of the one you guys just used? Worbly? No. Is that right? Womply. W-O-M-P-L-Y, Womply. You can also do it through your bank if you have a business bank account. If for those of you who are sole props and you use your personal account for your bank account, which again, you should probably get 2 different accounts for your bank and your personal. But if you do use your personal account for that, then most of those banks aren't giving PPP loans, but Square and PayPal and Lendio and Womply are all doing it, even if you have a personal account. That application took like 5 minutes tops. to fill out. And then after the fact, they want you to upload documents. They'll send you an email or a link to another portal to upload stuff, but it doesn't take long. So when we get off this call, like go, try, do it. If you haven't done the first two, one of you just applied today, if I remember correctly, hadn't applied for the first 2 rounds, and Elise, yeah, and got approved for both rounds of PPP at the same time tonight. That's insane. So, and it's a pre-approval, and then they put it through their process and whatever, and then we'll see what we see. So, okay, Elise is saying Square emailed her today saying they're ready to help her apply, but they're not able to update to use gross, so do not use the Square. Interesting. PayPal had a message across their screen that said something to the effect of referring to the March 3rd changes, and then they said something about we're looking into it, we'll know within the week or something like that. But it didn't specifically specify to use gross, but I did, because I know those are the rules. Janie, I see your hand up. You have a question?
Yeah, it was kind of along that. I had applied a week ago, and they're asking me for more forms, but then I asked them about, trying to do it through gross instead of net profit, and they said they didn't have the forms quite ready yet, but they'd get back to me. Does that sound fishy? Like
No. Who'd you apply through?
Bank of America?
Okay. No, this is a new change just as of March 3rd. My boyfriend for his business applied on the 28th of February. So he like missed this whole thing by 3 days. We have no idea. He's already gotten that money. He got another $1,000. It's a free $1,000, but he has a sizable business to the point where he would have gotten a hell of a lot more than that. So I have no idea how they're going to treat things like yours. Yours isn't processed yet. So you may have a good chance of getting them to change that to the gross, but no, that's not fishy at all. That's a new law change as of March 3rd. It's crazy.
And were you saying today the applications need to be in by today in order to?
That's what it sounds like to me. But did you submit your application? You just haven't submitted your supporting documents yet?
Correct. And it was when I originally submitted, it was using the net profit, not the gross, because this was before the change. And they said, it wasn't processed yet. It still isn't processed because they're waiting on the documents.
Right. I think that if your application is on file already, that you're like in already, but I don't know about that net profit change thing because that's just a weird new thing they've just done for 6 days. It's crazy. You guys that used Womply, did they specifically tell you to put in gross? Yeah. Okay. Adrielle and Elise both used Womply, and they said they specifically told them to use the gross. My suspicion is that these applications that were filed between March 3rd and March 9th are going to end up going with the gross numbers if you know to use the gross numbers. Since did they tell you, and they told you specifically on Bank of America to use your net, right, Janie?
Yeah, the forms asked for net, and then they didn't yet. Nowhere on the forms do they give you the option to put in the gross.
Okay.
That was all before the rule change.
Right.
So where I had asked them today, can I go ahead and have that changed? And they said they don't have it set up yet. They'll have someone with the small business call us.
Good. Okay. Well, then good. I mean, that just keep going on that lane and see if they'll let you change that over to gross for sure. You may have caught it in the nick of time. So fingers crossed to you. Does anybody else have questions about that and about your, if you have PPP, working with your unemployment and all that good stuff?
Can I ask a question? Hi.
Yes.
Okay, I'm getting lost about the release and whatnot. This is Betty. I thought that deadline was March 31st. Where did I come up with that?
For the PPP?
Yeah.
Well, it probably was. They've changed it 72,000 times.
Oh my God.
They released a second.
I listened to the Wombly thing too. I sent an email. I shot a message to you about that. But my bank isn't on their isn't on their system, which is
For Womply?
Yeah, they use Plaid to access the banks.
Okay.
And my bank is not listed.
Did you guys have to put your banks in for Womply? You had to do that yet? Yeah. They're saying yeah. I didn't go
Yeah,
through.
they
Yeah.
had us log into our account. So you
Right.
picked your bank and then you logged in and it verified it and it's in there.
Right. So my bank is not in there. I do Bank of the West, and they had like 4 or 5 other banks that they did business with, but mine wasn't on their list. So
How about try going through PayPal or something?
I'm not set up for PayPal right now, but I do have Square, and now we said not to use Square because it's not up to date with their program.
I
I'm on Venmo. I Venmoed you.
go through, you know what? The PayPal thing never asked me to log into my PayPal account. It's like a PayPal loan. It's a whole different thing that's set up through, now I can't remember what the thing is, but
Can I access that online
yeah.
on the
Just
computer?
I'll send you the link after this. Send me a message right now and ask
I
me.
love you. I love you. I love you. That's great.
You're welcome. Hold on. Who did I give that link to? It's Adrielle. Let me just go put it in this chat right now.
Okay.
So you guys have this. This is the PayPal link, at least. I'm scrolling. And here's this link. Let me put this in here. Hold on. Okay. So no, that's not the one I want. Loanbuilder.com, and then it's PPP loan start. So that's the one that I did. I just put it into the chat. Oops. I just put it
Let me see
into,
where it is.
I just put it into Carrie's chat. Let me try everybody.
Put in the general one. Okay.
There you go.
Oh, okay. Here we go. Loan
Okay.
Builder. Okay.
Yeah, so try clicking on that one, and then all you have to do really is just Google apply for PPP. Wombly was one of the ones that came up in one of the first ads that was in the search.
Yeah.
So-
Their site is really easy to understand. So if your bank is on there,
Yeah,
go for it.
that's what they were saying.
Yeah. Okay. Let me.
That's
make it
awesome.
happen.
Okay, Adrielle has her hand up. You go.
I was curious about like the PPP as income and reporting that through your unemployment. Obviously, I haven't been doing that because I didn't know that was a thing that I needed to be doing. How would I, like, if I needed to go back and do it, or
You can't really go back and do it, but you know what I was
right?
thinking? Whatever you got the
Mhm.
first draw you're talking about, right? Way back.
Yeah, because the current one is now a grant. Or-
Depending. Now the on your tax return, your PPP is not considered your personal
Mhm.
income. But when you're filing unemployment, they're saying that we need to file that on the unemployment. My suggestion to you, if you didn't do the thing, is go claim whatever you got in your next unemployment week, just so you
Okay.
can at least prove that you claimed it.
Okay, gotcha. As soon as we start getting unemployment, then
Right.
cool.
As soon as they start paying you again, go do that.
And would that apply for the second round as well, or we don't know?
The third round, the second round, third? What are we on?
Wait, are we on the third or the second? Which one are we on?
Yes, second. Yes.
Second.
Yes. We're in
Yeah.
there, and this new bill today may have changed all that. So I'm gonna tell you just to wait on that for a minute.
Okay, so I'll just worry about the first one then.
Yeah.
Cool. Thanks.
Elise, you had a question too, I think, right?
So say I get a bunch of money deposited in my bank account next week, which would be amazing.
Mhm.
They didn't even tell me. They're like, hey, you're approved for this huge chunk of cash. And I'm like, oh, am I spreading that over 24 weeks? Is it 8 weeks? Do they tell me?
Did you get the first draw? You've never applied before, right?
I didn't apply before. So they just said you get 2 draws for this much money each. Do you want to apply for both of them and just one? And I was like, please give them both to me. Yeah.
No, thank you. I have plenty of money. I want to wait and see what's in this new bill and see if the provision had changed. Supposedly it's going to be over 24 weeks. If you applied after X date, which was a long time ago, it's supposed to be spread across 24 weeks, but I want to wait and see if that changed in this new bill. So let's come back about that and revisit that.
Okay.
Anybody else with questions on this stuff? Okay. Okay. EIDL. The EIDL is not income. The EIDL is a loan. That's the economic impact disaster loan. That's through the SBA. If you want to apply for that, that is sba.gov. That is a loan. That is not your income. So if you are on unemployment, you don't report that at all to unemployment. It's also not income on your tax return. If you're using that to pay your business expenses, et cetera. The EIDL is a super great loan. It doesn't seem as super great now that we can use our gross on the PPP all of a sudden. But it's a super great loan that existed long before the pandemic. It's going to be around long after. It's a working capital loan. It is a 3.75% loan paid back over 30 years. All payments are deferred, at least right now, for the first year. It's not compounding interest. So as soon as you get your loan docs, all digital, it tells you the full amount they're going to owe, they're going to give you, and it tells you all the monthly payments right there. It doesn't change. It's the same monthly payments over the course of the loan. There's no penalty for paying back early. If your businesses get, back to booming next year, you can turn around and pay those off. So it's a wonderful loan, and it can be used to repay anything on your Schedule C. The PPP funds are more strict. The PPP funds are going to be for payroll, be it paying yourself, paying your actual employees. If you pay independent contractors with it, that's out of the goodness of your heart. That is when you start crossing from grant into loan department. If your PPP gets deemed that you didn't pay the right things with it or use the right things with it, it's going to become a loan. The PPP is 1% over 5 years. Okay, that's a fabulous loan. So if you have independent contractors that you would like to be paying in this hard time, you can absolutely do that. I will say this, the EIDL, when you pay your independent contractors, that's on your Schedule C. You can write that off on your taxes, and you can get an EIDL loan for it and pay your people. Awesome. So if you're in the position to be able to do that, then great. Our leather business got the EIDL, and we've moved our business online, and our auction group is doing good enough where we've had to go back to making leather again, which I didn't think would happen in a pandemic. But we've been able to start paying some of our people to start painting leather again and helping to support them during the pandemic, which is fantastic. And yes, we're paying 3.75 on it, but they're worth 3.75. Might be even worth 4 for some of them. But anyway, so that's just one of those things to be careful of. You can't use the PPP and the EIDL for the same purpose. So be careful about that. The PPP is to pay yourself or your W-2 employees, your business utilities, your biggest business mortgage. You can use it for outstanding debts, like if you order, let's just say leather from a company, and then they let you pay them back 90 days later or something, and you owe that debt, you're able to use it for that. The EIDL is a lot more broad. You can use it for anything on your Schedule C because it's working loan. And also you're going to pay it back. So they can't really restrict it as much as a grant. They can restrict that a lot more. So just make sure that you're considering what you're using your money for. If you have a separate bank for your business than for your checking, or for your personal, just make sure that when you're paying yourself, you're literally transferring that money from your business checking to your personal checking. Make sure you're spending those funds out of the correct places. The forgiveness application for the PPP in the second bill that they passed in December, they passed this new forgiveness application. I don't know if any of you guys have gone through and done the forgiveness thing yet, but it's like freaking nothing. It's like one page, and they're like, hey, did you spend the money on qualifying expenses? And you go, sure did. And they go, cool. So it became a lot less stringent in the second bill. So it's really fantastic. We filled one of them out, and it was like super easy, and got the first $1,000 forgiven already. So that's awesome, but it's really pretty easy. What they ask you for, you're basically, they're trusting that you used it for the right things. They're not asking you to prove it. You don't have to send in statements or receipts or anything like that. So it's pretty awesome. I would still keep those things, because as we're seeing, they change them all the time. So I would keep those receipts like just in case, make sure you're being due diligent about where you put the money and how you spend the money just in case they change it and want more things. But I think they're actually trying to make things easier on us due to the pandemic. So yay. Adriel, what are you asking for a link for? Which link to what?
For the forgiveness application.
I'll Google that. And
Okay. Yeah, I don't
there
need it
was
right
a-
now, but
Oh, you know what? I think that the Square notified him when it was when it was time for him to do his forgiveness. I think it has to come from the lender.
okay. Gotcha.
I'm pretty sure.
Okay.
Anybody else with questions about EIDL or PPP? And again, I'm sorry about the vagueness on the PPP. It just changed again today. So what the heck? We'll see. If you guys do apply for this PPP in this window, like after we get off the phone, keep me posted about what happened because I'm really intrigued by all these changes. I'm hoping that this new law is going to expand this or expand the dates or let us maybe even do a third draw. Like who knows? I could even see this administration adding another standalone bill that puts more money into the SBA for this exact purpose. So we'll see about that. Anybody else have questions on
I
EIDL or
do.
PPP? Yeah.
I do. This is
Go
Betty.
for it. Hey, Ben.
Okay, give me some more ideas on legitimate expenses for PPP.
I have some screenshots that I did today from my application, and I'm going to see if I can put them in here. Yes,
I
can
have
put
no
them in here.
employees, so
Right.
that's
I'm
the biggie.
putting some screenshots in here right now from what I actually screenshot today when I was applying for the PPP. And so I can tell you from this that what it says is, let me minimize and go find it. Here. So this says, what is the purpose of your loan? Select all that applies. This is through PayPal, by the way. Payroll costs, group health care benefits and insurance premiums. You're not going to have that if you don't have W-2 employees. Rent or mortgage interest. These are going to be your business properties, not your home, unless you have a home office and you deduct part for business. Okay.
I do have a home office.
Okay. Then
That
you
is
can
deductible.
the percentage that's business.
Okay, got it.
Utilities.
What about, okay, I need to have some work done to my booth in Colorado. I desperately needs another floor redone.
Not
Can
for
I go ahead and-
PPP.
Pardon?
Not
Nope.
PPP.
Okay,
That's going to be EIDL. And this is what I was going to say too. EIDL, since it's a working capital loan, that's one of the reasons we got the EIDL. We amazingly bought a brand new booth in Bristol in 2019 on closing day. And then Bristol didn't open the next year, so we haven't sold a single thing out of it. So that's awesome. But when we get back there, if they do open this year or when they ever open, we have an extensive amount of renovation that we have to do. Because that building was purchased before the pandemic, we can use EIDL funds in order to renovate that booth. But you can't use EIDL funds to like buy a new booth or, as they say, start a new location. Like if you owned a restaurant, you can't use that money to open a new restaurant. You can only use that money to further the existing business. So EIDL is going to be what you're going to put a new floor in your booth with, not
okay,
PPP.
okay. All right, then that would apply to my plan to purchase a camper that could be used on site, so I don't have the expense of renting a room in somebody's house.
Somebody, a friend of ours in the community specifically asked that question to an SBA agent, and she was told yes. She was told if your business has to move and be on the road and you have to have a place to live, that they would consider that absolutely okay with that. And again, the rules for the EIDL are way, way, way less strict than the PPP.
Got it.
And I don't even know, to be honest, if they're going to even ask for any proof of what you spent that money on, because you can use it on anything on your Schedule C. So literally for EIDL, look at your Schedule C from last year, and anything that's on there you can use it for. Now, as a sole prop, one of the things that's on our Schedule C is our vehicle. So can I use that to pay my vehicle insurance? Yeah. Yeah, I can. So
I think I took
keep that in
mileage last year though. Or
it
for
doesn't
the-
matter. You
Okay,
still, your vehicle is listed on there under car and truck expenses.
okay.
So it's a business asset. So yeah, you can absolutely use it for those things.
Okay. That's
Cool.
good. Thank you.
You're welcome. Janie has her hand up. Yes, ma'am.
Okay, question. You said rent would be covered under that PPP. Would that include booth fees and commission, like if I pay a percentage to fairs?
Booth fee and what'd you say, commission?
Commission, paying a percentage to the festivals.
So yeah, so when you pay a percentage like we do SoCal and Bristol, instead of a flat booth fee, we pay a percentage. That's still your booth fee. It's just paid, it's just assessed differently. So yes, those sort of things are absolutely approved for PPP. I personally asked that to an SBA agent when the PPP first came out back in April. So yes, that is considered rent. Even if you own that booth, you are renting the space from the festival every year. So that is absolutely an expense that works. And again, not your home rent unless you have a home office, but booth fees, yeah, for sure. Cool. Anybody else with questions on that? Okay. All right. I am scrolling on down then. Oh, the EIDL advance. That's one thing that I also do want to mention. The advance money is separate from the loan. The advance is a grant, and that advance portion got dried up real quick back in like April or May or something. The money was just gone. And so a lot of people only got the loan portion and didn't get the advance. A few weeks back now, back in January, end of January, I think the bill from December put more money into the EIDL specifically for the advance. And in January sometime, we got the ability to start applying again for the advance. So that's separate from the loan. That's a grant. So if you have the opportunity to also apply for the advance, do that. It's probably going to dry up soon too. So if you're going to apply for the EIDL, or if you don't have to get the loan in order to get the advance, you can just apply for the advance. I don't know if those funds are dried up yet or not, but that's another thing just to try. Just literally Google EIDL advance and see if you can get that. Like I'm of the mindset at this point, like let's just apply for everything and like throw everything at the wall and see what sticks. Right? So I know. Okay. Does anybody have any questions on that? If not, I'm going to open the floor to any questions that you guys have, anything we've discussed or anything that I have not yet discussed. So I'm just going to say, go for it. Raise your hands, chime in, whatever you'd like to do. Okay. I'm back to your screen, Brent. Hey, go.
Sir, I got a question. Get my head straight on this. So I got the application again, and I didn't finish filling it out because it wanted, my numbers for this is for the PPP, the new PPP that you mentioned. All right, and so my numbers 2019, 2020, and my current numbers. And it wanted current income also for this year. At a space.
And then you laughed.
And I don't start it. I mean, I work in Scarborough, so I'm wondering if I should wait. I texted you about it, but I'm not quite sure, you were like, well, just go on ahead and do it right now.
I'm going to tell you right now, you missed it because
starts on April, May.
You came in after we were talking about this, but they changed the laws for the PPP again on March 3rd. And today is the deadline to allow us to qualify with our gross instead of our net, which means getting a crap ton more money. If you have a Schedule C, are you a sole proprietor in your business?
Yeah, I am. So
Who are you trying to apply through?
Estimate 2021. Can I put estimates? Can I write estimated income?
How do you have a crystal ball? Like how else are you supposed to? Yeah.
I mean, I'd leave it blank. Otherwise, I would just leave it blank because I haven't had an income yet for 2021.
If they're asking you to predict it, you have no choice but to guess. If they're asking what you've had so far, then you put 0. Or if
It
you
lists
have
out all
that
12
question.
months. So, I mean, I'd like, well, I mean, it's his
Can I
own
ask you-
March.
can I ask you for all 12 months of 2021?
Yeah, it's got all 3 years listed on it.
Who are you going through?
I think I still got it on my screen right here, right now. SBA Disaster Loan Assistance.
Oh,
Targeted,
for the EIDL. That's the
targeted
idea.
EIDL. Okay, that's what I'm looking at here.
So they're probably asking you to predict. The PPP though, isn't that the one that you applied for and got denied?
Yes, I did for
Did-
Square. Now it's still open in Lindio, and I go back and forth. They say, well, we need evidence of this. I sent you evidence of that. Here it is again. But that's been going on now for almost 2 months.
So PM me after this and I'm gonna catch you up to what you missed because I know you came in late. But we've had a big fever of trying to apply today. And what I want you to check out is going through Wombly. Is that right, guys?
Yeah, I wrote that down here.
Good. I want you to check into that. That is like a 5-minute application. You need to get that in tonight.
All right.
The deadline for being able to use that gross is supposedly tonight, unless this new bill changed it and I haven't heard. I would try, you can't get 2 PPPs at the same time. But if you have not completed the process through another party, you can go do it in Wombly. So you can let go of the Lendio and not apply through them, because if you apply now, you get to use your line 7 on your Schedule C, which is your gross, as opposed to your line 31, which is your net, and that is going to get you so much more money. It's not even funny. You're a 1-person sole prop, so when they ask about employees, you say 1, and then you take your line 7 and divide it by 12 for 12 months of the year, and that's what they're going to ask you for, is your monthly income. It's now your gross divided by 7. It's a big difference. So go do that after the call.
And now that's a change, because is that a change?
As of March 3rd, it just happened.
Before they had said if you were seasonal, then you do it was net, but
And you're not seasonal.
divided by 3 times 2.5 for
Right.
the seasonal business.
Yeah, just don't forget that you're not seasonal. Anytime you have the ability to sell things on a website or off season or whatever, you're a full-time business. Just because you make the bulk of your money at a certain festival doesn't make you seasonal. You're still a full-time business. So just be careful about boxing yourself into that hole.
I mean, I'm just rental at one. I mean, I can't rent it. I mean,
I'm sorry, I forgot. But you're a little bit different. You rent just at the one place.
I have the rentals, right?
I understand what you're saying. Yeah, I think that I don't think that these applications are even asking about the PPP, about that sort of thing. They just want to see your Schedule C.
Okay.
Okay.
All right. Thanks.
All right, cool. You're welcome. Anybody else have questions about anything we've already covered or anything we have not covered? Now is your time. I talked a lot and I said all the things and covered all the stuff. I'm going through to see if anybody has hands up or I see unmuting. Last chance for questions. Okay. I may put together another Zoom once I get more information on this new bill, if there's a whole bunch of stuff that's changed. I just want to encourage everybody again, if you find articles that are explaining all these new changes, like the thing from March 3rd with the PPP, it didn't come out of some new bill. Like the SBA just up and decided they wanted to change things. So like if you, get turned on to things like that, let us know so we can share it around the community and hopefully all benefit from it. I want to remind everybody that next week we're going to be doing our tax basics seminar. And so if you have anybody who doesn't know shit about shit, if you know somebody who needs some help with the basics of stuff, maybe they haven't filed in a long time, maybe they haven't ever filed, this is going to be a good one for them to come to. Next week, since it falls on Wednesday the 17th, which is St. Patrick's Day, we're going to make this the drinking game edition. So even if you know all about taxes and you just want to come join us for like a fun Zoom and bring cocktails, that's fine. We're going to have some breaks for Irish music, and we even have an Irish dancer that's going to dance a little jig. So we're just going to celebrate St. Patty's Day the right way, learn some tax basics from the beginning. So if you have friends that really need to start from the beginning, be it business owners, sole proprietors, independent contractors, cash earners, whatever, send them on to the tax basics, and we will be able to kind of walk them through this. And I want to make sure that everybody remembers too that if you need to get a hold of me, if we are not friends on Facebook, here's some of my contact info. You can reach me on here. Direct messages are always going to get answered the fastest, and emails I generally read and answer at like 2 in the morning when the rest of you are asleep. So just an FYI to the priority of the need of me answering your question. And again, this is available for replay every Saturday at 2 p.m. Eastern time. There'll be links up on my page and RCF and Life's Affairs page as well. So if you know people that need to come back in, I'm always in the comments answering questions on Saturday. So if people didn't get a chance to be here, you can still ask me questions. It'll just be in the comments for Saturday. So you can always find those links on my page or RC for Life's Affair. Speaking of which, thanks so much to Life's Affair for letting us do this and putting together this for us every week, and to RC for facilitating. And thank you guys for all coming and for being the people who want all the knowledge. So thank you for that. And again, if you have questions that we didn't cover or something, or maybe you just didn't want to say them, send me a message and we'll talk about them. And otherwise, hey, have a good night. It's a fabulous day. A lot of really cool stuff happened today. So congratulations. Good night, everybody.
Off
Thank
to
you.
Wobbly.
Good night.
Bye, guys. Bye.
Good night, everybody.
Good night.
Thank you. Good night.
You're welcome. Night, guys.